All right. Well, hello and welcome everybody to another fantastic night of talking about credit banking, personal debt finance strategies, getting out of debt, velocity banking. It goes by so many different names, but tonight is extremely special because we've been talking about it for a year now, actually. We started these webinars, Joseph and I, about a year ago. And recently we've had Richie over the last 2 months really diving in because he has taken this skill set and this knowledge to the next level. And then so what Richie has been really sinking his teeth into and spending his time doing is putting together a really to easy follow step by step process to really implement this into your life. We were doing consultations and trying to help you folks out as best as possible. But what, you know, I get a better connection out here anyway. So, what we were able to do, and what Richie has been able to put together, is a step by step little video training process. And we told you guys about this, and we've been asking for you guys to really help us go through it, see as you use the calculators, if you're able to start to look at your budgets and everything that you want to do, it revolving around the credit banking strategy, the velocity banking strategy, that you're able to implement it into your life and really take from where you are today and level yourself up. And so I'm going to go ahead and pass it over to Richie because Richie's going to talk about what this whole process of leveling up in real life looks like. If you are on YouTube, then in the description of this video, you'll see levelupinreallife.com. Also in Zoom, we'll throw it in the chat. Save that. So then after this video, you guys can, or actually after this webinar, you guys can go in there, get your own, free. It starts with just a you know what? I'm not going to tell you exactly how it is. I'm going to let Richie explain the process and what you're going to go through so you can take from where you are today and level yourself up. All right,
Yes,
Mr.
sir.
Richie, come on out and tell the folks what they plan to expect from this new amazing platform that's going to walk them and really hold their hand through the process.
What's up, Ray? Thank you so much for having me on again. Wise guys and ties, you guys are so close to my heart, and this this idea was kind of a labor of love, I guess you could say, because we um, it started with getting an idea of like how Ray and I and Joseph can collaborate. Now I remember the first time I met Joseph was at our one of our regional conferences or national conferences actually for our education services. And I've actually spoken to him over the phone because he was wondering about trying to get me out to Arizona to help him do some trainings on this specific strategy. And by at that time, it was just kind of a little rough with the timing and everything. But then I got to the national conference later that time, and this big looming shadow came from behind, and then he taps my shoulder and he says, "You're Richie." Like, and I look at his name tags like Joseph. Gave each other a big hug. And then the ideas just started pouring in from there. Got to meet with Joseph and Ray at a cafe afterwards with a couple of my other good friends and investors out there, and the ideas just started rolling in. We started looking at being able to just figure out how we can make everything cohesive and easy to work with, especially with a specific strategy. Long story short, was he wanted to figure out how he could get wise guys and ties customers into a coaching system for credit banking, or what we call velocity banking at Renatus. And the idea was this: those who become Renata students from here on out will be able to access, some kind of coaching program. And the idea was to actually have them partner up with my old company that I'm no longer with, but those are the guys where this strategy really came from over here in Hawaii. And I was trying to pair them up. Unfortunately, I guess it was bad timing for them, And lo and behold, all some time had passed, and um, unfortunately, we found out that Joseph was starting to get sick. And to me, I felt like, what, we got to move on this. We got to create something right now. And I just decided, I'm going to go and take the reins, instead of partnering with the old company. I'm just going to go ahead and create something. I'm just going to go ahead and take everything that I've learned from the many years and from all the people, the hundreds and hundreds of people that I've helped one on one. I'm going to take everything that I remember and I'm going to put it into a video library. This is not, I guess you can't call it trainings or instruction or advice. It's basically me telling stories and options. All right. Because I am not an instructor. I am not a trainer. I am not a certified financial advisor. I'm not any of that stuff. All I'm doing is taking all my experiences and then putting them on video, instead of meeting people one on one and taking a lot of time doing that. And the cool thing about it is the more and more I gather, the more and more strategies that I rehearse in myself, I will put on, and I'll keep doing it over and over and over again, because everyone is different. And so when people go through this system, what they see is going to be one of their solutions or one of their situations, and they'll be able to pull that up. And so what I did was I created a website called levelupinreallife.com. Now, something very dear to me is gaming. I'm a gamer, dude. I love playing games. I love doing things, and I think I talked about this last week, where one of my favorite adventure games of all time, one of the very first role playing games or RPGs that I ever played, was this game called Lunar. And it was about this kid named Alex who starts out at this little city called Berg, or not this little city, this little town called Berg. And Alex had a dream, right? So here's him in the small city, the tiny circle that's surrounding him is this small town called Berg, but he had this dream that's way out here, right? Sound familiar? It sometimes feels like a lot of people are born into this and they stay there at level one. Level one is just one of those things that people just live on and live on. All those people in that town stayed at level one. But Alex had that dream of becoming, in the video game, he wanted to become the Dragon Master. He wanted to be like his hero. His name is Dine, and become the Dragon Master to protect the realm, and to fight off the evil and get to the end game. Uh, and the fun thing about that is there was nothing going on until Remus, Alex's good buddy from Berg, decided to nudge him out of the town. Okay, this is just one of those things that sometimes people need that motivation to get pushed out of their comfort zone, so that way they could start growing out of it. So that was my idea. Was, what, I had this idea a long time ago with Level Up in Real Life. I just know how to tie it into things, and then when I merged it over to credit banking, velocity banking, and then I related it to my own life, I just realized, holy crap, this makes sense. I'm going to go ahead and create a step-by-step guide for everybody to start at level one or even level two if they want to be in there, and start leveling up from there. And in this website, you're going to get an idea of where you should start. You're going to choose your own adventure. And the goal is to get to the end game if you want it. Otherwise, if you would just want to stick with level two, or stick with level one, or stick with level three, then that's totally up to you. But it just comes down to this. I want to make sure that you guys have the options, that you have everything that I've learned, and put it into video form. And that way you'll have something to listen to and watch all the time. Now, when it comes down to it, though, is that I do run a business. Okay, this is a business, and my business is an independent contracting marketer for Renatus LLC, or the company Renatus that offers the initial foundational course, Velocity Banking. And so what I'm going to do is I'm going to share that with people. I'm going to show them, how to get involved with that at the bare minimum cost to make sure that goes. But as far as Level Up in Real Life, so you invest in the Renatus education. But as far as Level Up in Real Life, I am not charging a dime for that. That is 100% only for those who get into and invest in their knowledge for the Renatus education. They'll take that foundational course of velocity banking, and then they turn it up in Level Up in Real Life. So that's the journey that I laid for people out, and that's, that's the only way I can make this work as far as making it a business. And so bear with me as I show you what that's going to look like. But also, I actually wanted to talk and give you a little sample of one of my trainings. I just got done recording it a couple nights ago, and I popped it in, and it has to deal with student loans. And this is a level 2 type of situation for student loans, whether it be your student loans or you're prepping to help your child out with student loans or somebody else with student loans. And it gives us that idea of realizing that most people, when they plan for college, I always get this question from financial advisors. They ask me, when do you think is the best time to plan for college for your child? And I'm like, I don't know. Like, when I got into it, I started looking at it when I was a junior in high school, maybe even a senior in high school, and they were like, nope, 17 years too late. In other words, you got to start planning when you're a child. And that's why they always talk about these, like, that's their little joke. It's like a financial planner joke, I guess, when it comes to FAFSA and finding funds to get somebody through school and everything like that. Well, I'm going to talk about that a little bit. To give you an idea, like why we use this velocity banking or credit banking strategy along with everything else that we do. It's not just this trick. This is something that you have, that you get down as far as being an expert at. And then once you become that expert, you start merging with everything else in finance and wealth building. When you do that, it levels you up. And that's why it's called Leveled Up in Real Life. Uh, I play games. I never got to level up in real life if I'm playing the game, but I get it. I understand it. And if you're a gamer, you understand what I'm going, where I'm going. And just to talk about Alex and his situation, yes, eventually he got to the end game, right? But there's a lot of things that he needed to get, was the tools, the knowledge, and the experience from level 1 to end game. And that's what we're offering. That's what we want to make sure that you have and be prepared for. So if you want to check it out, I'm going to go ahead and share my screen real quick. And yes, today we just went live. It's pretty interesting to say, hey, we got a website now, and it's I think it's going to be very, very important for people to see. So this is it right here. This is Level Up in Real Life. And as you go, you can scroll through it. You can watch the video up top, and I strongly recommend that you watch every single video as you go through. And you get to choose which level you want to be at. So get access. You'll get these free things such as free calculators as you go. If you're in level 2, level 3, you get other things as well. Excuse me. So there's a lot of perks to be involved with Renatus's education and Level Up in Real Life. You get some added bonus there. And there's some rules and some disclaimers that you got to go through to make sure that you get it. But this is it right now. Go ahead and check out levelupinreallife.com, and we'll take you over there, and just enjoy that after this video, of course, or after this webinar. So hopefully that was enough information there for you to just kind of digest a little bit. But let's talk about student loans right now. I think that the reason why we have these Tuesday night workshops is to have an actual workshop, not just me pitching stuff. So I don't want to pitch anything anymore. Let's just talk about an actual case study or situation. Okay, so I got to spell student correctly here. So I have actually created this Level Up in Real Life process with every single scenario that I have in mind. And one of those that I ran into a lot when I was helping all those people here in Hawaii and even across the nation was student loans. And a lot of people are just having an issue with student loans. The beautiful thing is that to me as an investor, student loans is just another form of OPM, or other people's money, in so many different ways, whether it be scholarships or just the what is it called? Sometimes they waive, after the after you do your studies, you may end up getting waivers. And of course, whatever else FAFSA offers, as well as the student loans, or the banks. So let's just go ahead and put banks out here. And student loans are generally backed usually by the federal government, depending on how you do it. Now, the problem with a lot of people is that they just jump straight to this and they don't contact FAFSA to figure out what to get before it happens. A lot of times, even when a student becomes a junior, it's already too late to start asking for free money from FAFSA. It's already too late to try and find those waivers for that specific study that your student's going to get into, or yourself for that matter. But scholarships are there, so get yourself into those clubs, and do your best to get that 4.9 GPA, which is crazy. And so it's really hard, right, to get all of these guys, especially if you're too late. So for you as a parent, if you're going to be looking at sending your child to school, regardless of where they're at, what age they're at before high school, start looking at FAFSA's guidelines. In fact, there may be other people out there who can actually help you realize in your specific situation, once they run your numbers, there are financial planners out there who can actually tell you, uh, like, what steps to take to get your college tuition for free. Let me tell you a little story about FAFSA here. Okay. FAFSA actually offers free money for certain students, right? Or certain, I guess you could say certain income students, okay, and their families, okay. But the thing is, though, generally there's rules on which college to pick, depending on which school to pick. Okay. In other words, little story time. Uh, mm, I hope they don't mind me sharing, but my wife, she actually went to Seattle University and got her nursing degree and everything like that. And she did qualify for scholarships. She did qualify for waivers and whatever else, but then it ended up where she needed to also take out student loans as well to finish it up. Unfortunately, there was nobody there to tell her because of the situation that she was in, like a single parent household. Income wasn't great, and everything like that. If she had tackled with FAFSA and got an idea on what schools they would actually cover 100% free ride or anything like that, um, she would have been able to avoid getting out student loans if she went to instead Washington University, or University of Washington, whatever that, UW, yeah. And instead of Seattle University, because Seattle University is a private school, it's a private university, whereas UW is a public university, and therefore FAFSA actually backs them even more. So, uh, I actually talked to a financial planner about that. I actually ran the numbers and everything, and he was all like, "Wow, yeah, your wife would have got free ride, totally, if she went to UW instead." But she picked, Seattle University, and it did its thing, and we got all of that, and we ended up paying all the student loans off anyway with Velocity Banking and any other tool that we came up with. But all in all, I'm saying find out what is possible for them. If you do have a financial advisor that could actually take you through the FAFSA guide and the FAFSA process to help your kid into a better spot for schooling, then do that, because there's free money all over the place out there for this kind of thing. But now we're talking about people who put themselves into the banking situation, and of course, if you've already taken or have already seen the velocity banking strategy or the credit banking strategies, then you'll realize, of course, if we're going to pull up a student loan, and let's say on average, we're starting to see, school costs skyrocket. And let's say it's $75,000. Okay, $75,000 all together now. It's like a 4-year all together student loan, and this is minus any of the free money and the waivers and the scholarships that your child or you were able to get. But now you have $75,000 debt altogether. Of course, we all know that every single student loan per year, per subject, per whatever, is all broken up, and they all have these varying things. And some of the things that you're dealing with is subsidized and unsubsidized interest, and it just gets very confusing. And so in the training that I have in Level Up in Real Life, it talks about all the details in that. I'm not going to get into that too much. I'm just going to go over the actual strategy that we use with credit banking and velocity banking to pay it off as quickly as possible. And the cool thing about these student loans is that it's a minimal cash flow hit, meaning that the payment usually is not that bad, right? If we're going to be amortizing this thing out for 30 years, $75,000 for 4.5%, which is basically, that goes all over the place, that interest. I don't even know if this is where it would be at right now. I just know that mortgage interest rates are low, but I'm not too sure about the actual lending interest rates at this moment for this kind of thing. Sometimes they bring it down, sometimes they shoot it back up, whatever it is. And then sometimes it's variable or it's fixed. So we don't know. But what I do is I just get averages and give you an idea of how much or how long it would take to pay off if you stuck to the original plan, how much interest it's going to cost you, or if you use the velocity banking strategy to wipe it out as quickly as possible. So, for this situation, we're looking at $380 a month. Now, that's not so bad. So let's go ahead and open up,
I'm having trouble hearing you.
Oops, Siri, be quiet. I'm not talking to you. Let's go ahead and pull up, just this simple calculation of a couple. And I'm looking at their cash flow profile calculator that I actually offer to everyone. Everyone gets this calculator if you want it through Level Up in Real Life, Level 1, Level 2, and Level 3. The reason why I offer this calculator for free is because it is all it is just an Excel sheet. It's a pretty Excel sheet. It means, it's not like it was, there wasn't much work put into it really, but it does calculations really well to figure out cash flow and debt to income ratio. And in this case, it also helps people keep their budget correct. It gives them the awareness of where they are every single week or every single month or however long you want to track this kind of stuff. And so let's say income or the take-home pay right now is $8,000 for this particular household, and the monthly gross income is $6,000. Oh, I forgot to put something over here, so I'm just going to say $7,000 on this. No, I'm sorry, $4,000. So here we are. Before take-home pay is $10,000. After take-home pay is around $8,000. And they also have a house. They have a mortgage that they just opened up, and it's going to cost them $1,717 a month on that mortgage. They also have a credit card with $7,000 on it, and it's costing them $93.28 a month. They also have a PLOC, and this is them prepping for what's going to happen. But also now they're going to be taking out this student loan. So let's just say this is the it's for school. Student loan. There's no limit on it because it's a loan, but it's giving me $75,000. 4.5, and the cost on it was going to be principal and interest $380 a month. So it's amortized out for 30 years. Okay. Now this is something that some people actually do. They just go ahead and see if they can amortize it out 30 years. Sometimes they bring it down to 20. Sometimes they bring it down to 15. The smaller the date is, the more expensive it gets. So that's why people spread it out over a long time. And then that's why you hear a lot of people just like popping champagne when they finally get that thing that says your student loan is paid off after so many dang years, right? So. So here we are in this particular situation. They got their living expenses and all that fun stuff, but now we're going to actually put in a little miscellaneous because now the student has to take care of themselves. So you're going to be uh, giving them $1,000 a month for all of that. That's a room and board, and then books and other things that the student loan never really took care of. Now it's probably more expensive than that, but I'm just using this as an example. So here we are with this specific situation here. We are looking at take home pay 8,000, fixed expenses, the regular mortgage and all that fun stuff, including the student loan, living expenses, and net income cash flow. Now, the funny thing about this is you could have the opportunity to go ahead and not pay this for the time being. Just let it hang. $75,000 balance, and just let it hang. And depending on if it's subsidized or unsubsidized, uh, you know, either one is going to increase your interest payments, or the other one's going to basically be paid for by the school. Okay. At the top of my head right now, I sometimes get these confused. I'm not too sure which one is which. You can look it up sometime in Google. But subsidized, I believe, is the one that you're able to have, the institution basically pay for the interest as you go, and then unsubsidized is the one that you actually, you know, if you're on a deferment, like you're deferring the payments until graduation, then that interest goes up, and it's based on the current balance, so therefore it compounds over time. So it's up to you on how fast you want to pay this off. Do you want to start doing it right now, or do you want to wait for schools to be done and have your student pay for it? Either way, there's so many different ways to do this. So as a parent, or as yourself, who has to pay $75,000 off on student loans, sometimes we'll just go ahead and say, you know what, let's see about paying this off as fast as possible. So what was that payment again? 380. Okay, so 380 right now as you pay. Okay, now you do have this PLOC in place, this personal line of credit. It's a $15,000 limit at 15%, and you don't have anything on it. There's zero balance, and so now you have that opportunity to say, you know what, let me set up the plan here. Let's go ahead and see how fast it's going to take to pay off. And what I'm going to basically do is I like using times six, cash flow times six, to figure out my chunk out of this particular loan. So instead of paying the mortgage off, we're going to focus on the student loan right now. And so right now I have 1,000. Let's just call it 1,000, round it down to 1,000, nice round number. And so that means I'm going to be taking $6,000 chunks out of this thing every single month, until my child gets out of school, and then they can start taking over the payments or whatever, or refinance it to something else. Totally up to you on how you guys want to do that. But if you just do it this way, right at this moment, we're looking at $61,000 in interest alone on a $75,000 loan. uh, that's pretty crazy. Like that's pretty crazy. So uh, it's up to you. Does that look good to you to pay $61,000 on $75,000 borrowed on a student loan? It's really hard to say. So what I'm going to do is I'm going to say we're going to take $6,000 chunks using that PLOC 15%. And let me just half screen it so that way I can just refer back to this calculator here. And you're going to learn how to use these calculators and level up in real life, by the way. So I'm going to go ahead and pop in my income, which is $8,000 here. I'm going to pop in my fixed expenses, 2220, and I'm going to pop in my living expenses, which is 4700. And here we are paying this $6,000 off in 6 months. And the interest it's going to cost us is $259. $259 in interest to use the line of credit first to make that chunk out of there. If you go back to the amortization, how long will it take you to pay off $6,000? I'm highlighting the principal paid, by the way, and this is all aggregate principal. It will take you 55 months if you just stick to the original plan, and cost you almost $15,000 to pay off $6,000 worth of student loan debt at this point. Again, the choice is to amortize it out as long as you want, and therefore, the longer you do it, the more the interest is going to hurt you. If you squeeze it to 20 years, then it changes the game. It changes the interest payments, and it'll take you sooner to pay off $6,000, and so on and so forth, because you're now making multiple payments or more payments anyway. But in this case, if we just go ahead and use that personal line of credit to make a big chunk of $6,000 out of this particular loan, so $6,000, what you'll see is your savings, well, looks familiar there. It's almost $15,000, and it shaved off 54 months from the back end of the loan, of the student loan. And if you keep practicing this, because you're going to be paying this thing off every 6 months until, let's say 4 years. Let's just go to 48 months, right? Praying that your kid graduates in 4 years. So let's just go ahead and do this, every 6 months until 48 months, and then your kid could take over because they're going to have a job and all that fun stuff. So here's 48 months. You had already paid off. Let's see here. Wow. At this point, the balance would be $17,000 left over for your child to take care of. So, that's pretty nice, don't you think? As we go, it's you have that ability to really shrink down the debt. You're going to be taking 1, 2. Sorry, let me count these. 1, 2, 3, 4, 5, 6, 7, 8, 9. Sorry. So six chunks, basically. You're going to be taking 6 chunks. Interest that you pay on this is $8,000 instead of $61 if you go through the whole thing. But let's say you stop at $17,000 and have your child pay for the rest, because they got their high-paying job from that amazing, awesome art degree they got. I'm just kidding. And what's going to happen is, if you take this total $259 and multiply that by 6, then you add that to the total interest that you're paying towards this loan. 259 times 6, 1554 plus 8396. Again, if you do this for the whole time, really, which one is better, $10,000 or $61,000 on this student loan? To be honest with you, I think I would choose this. But again, this is just that one scenario where if you were to pay this off, or if this was your student loan, or get to the point where your child will take it over and everybody's happy. So it's a really interesting concept here, being able to wipe out a student loan in a fraction of the time, because it was going to be 30 years, but instead, if you stuck with this, it'd actually be 5 years. You'd be able to pay off a student loan in 5 years. That's just 1 year. That's just 1 year more than the actual schooling goes, as far as 4 years go. Beyond that, though, no control over what your kid does as far as piling on to the student loans. Because I've actually seen this happen before, where I I actually helped a pharmacist. Okay, I helped a pharmacist, and she was dealing with her own student loans. She was dealing with, I believe it was $360,000 in student loans. She's a pharmacist, right? They make great money, right? Right? And I remember it vividly, actually calculating it out in an amortization. 360,000, and I think it was around 4% at the time, and I think she had it amortized to 20 years. Okay, so meaning her payment was a little over $2,000. And in this case, at 4% and 20 years, I'm sorry, we're not chunking here. I did the wrong thing here. I was inputting in the wrong part. Let me go back. There we go. So it's 360,000, 4%, It's a 20-year loan. And she was just learning how to use this strategy. All right. Now, in this case, we're looking at $163,000 of interest that she would have to pay on this $360,000 student loan, and that's over 20 years. I guess that's not so bad, but that's a cash flow hit of $2,000. That means that she is living without $2,000 of her hard-earned money while working as a pharmacist. But what does that actually mean as far as pay goes for a pharmacist? Well, she was actually making let me go back. She only wanted to work part-time. That was her thing. That she's like, I got this degree and I could just work part-time, and that's gonna be my lifestyle, and I'm gonna be able to live it up that way. But then once she started getting her bill for her student loan, she's like, oh crap, I can't do that. So she wanted to figure out how she could do this faster, and so that's why I showed her what she could do. And after the thing is, though, I tried to really help her understand that if she went full time, she'd be able to pay this thing off faster because her cash flow was kind of thin, pretty thin for a pharmacist. But the fact of the matter is, she was part time, although she was still making cash flow of something like 1,000 a month. Okay, but she'd rather party, she'd rather spend it, she'd rather just whatever. And I can't, for me as a coach for this kind of stuff, I cannot break that in somebody. That's not my responsibility to go psychological on people. All I could do is show them the options, and if they choose to do it, they go ahead and do it. If they don't choose to do it, then they got to figure out another way or stick to what they're dealing with right now. And so what I did was I said, then in this case, you're going to have to rely on delayed gratification. And so she when I ran her numbers, right, I told her if she went full time, then that means that her cash flow would be so much more. I think it was going to be around like $7,000 a month. And therefore, if you look at 7,000 times 6, we were looking at a $42,000 chunk out of this every 6 months. She would have been able to pay this thing off in 3 years and 6 months if she just did it that way. Again, this is just one of those people who just didn't get delayed gratification. She wanted it instantly, and she didn't want to go full time. She just wanted to stay in her part-time job. And again, I can't fix that. So when we're looking at $1,000 cash flow, that just means that she's only being able to take out $6,000 chunks, and she's still going to take 12 years to get it paid off, and she's still going to pay $72,000 in interest. In fact, the interest wasn't even her deal. It was how long it was going to take to pay off. And then she's like, oh, well, in that case, I just might as well keep it at the rate that it's at right now. And I'm like, it's okay. She really didn't want to get coached. So that's another point I got to make, especially when you come to level up in real life, is number one, be open to it. Be open to being coached. Be open to, the many things that can happen for you, but also realize that some of these things are going to be delayed gratification, or a lot of them for that matter. As much as I'd love to give every single person who uses this strategy an instant gratification situation, which I have, because they were already in a good position. The delayed gratification should be something that's expected as long as you put the work in, as long as you put the knowledge and the applied knowledge and the work into it, then that delayed gratification will happen. This is not just a magic trick. As much as a lot of people see, that process of taking a line of credit and, moving the money in all these certain amazing ways and paying off debt, it looks great on a calculator. That's your instant gratification right there. It looks great right now. But look at all the work that needs to be put into it. I mean, does everybody have a constant cash flow? No, nobody has well, there was one guy. There was just one guy that I met through all my years of, helping people out. There's this one guy that had everything to a system. His cash flow was specifically this. It was his expenses that were specifically this. And he just, he uniformed it out. Total intellectual guy. He just needed it to be perfect. He did not like anything outside of the norm. 50 cents off, he's like tearing his hair out already. So, it was easy for me to just go ahead and say, this is your system, just follow this, use a calculator, and, have fun with it. Um, but for, everybody else, normal people, normal people, uh, who have, who have these spending habits or these income habits or whatever it may be, we have to understand that delayed gratification should be expected. Okay. Um, the beautiful thing is, though, is that you're going to be like Alex and you're going to see that Dragon Master dream by planning it out on these calculators. If you don't know how to use them, well, Level Up in Real Life teaches you exactly how to, form it to your own self. And these calculators are for you, nobody else. You don't share it with anybody else. You don't share it with me. You don't share it with anybody else, because my goal for Level Up in Real Life is this. As much of an expert that I am in this strategy, I want every single person who goes through the system to become better than me. I want them to exceed me. I want them to level up beyond me and get to their end game, because everybody's end game is different, right? Get to their end game faster, start building faster and do the things that they want to do faster. Because, well, that's what comes down to it. It's the time that we have. You get to the end game faster. Can't you enjoy it more? You know, um, it's just like, it's just like gaming, really. You get to enjoy the game more once you get to the end, and then, move on to the next game. Or you could just stay on that one game forever and move nowhere. Then what's the fun in that? So I want to give you guys that opportunity to check it out, levelupinreallife.com, and see what you think. I would love to get your feedback. Honestly, with this, you got to understand that I am only offering this today for you guys, for Wise Guys and Ties' audience, for those who wanted to take that next step into velocity banking or credit banking. And if you are not a Renata student right now, this will give you a very good chance to get into it, plus give you way more than any other Renata student that's out there right now. It's a huge bonus for you, because you're working with us. Nobody else has this. Isn't that cool, Ray?
Dude, it's absolutely amazing. This is beyond what we could ever imagine. Like, I just don't think people can comprehend it until they start going through these video trainings. And remember, you guys, all you have to do is just put your email in and get plugged into the first video trainings, and then it builds from there. Just go in, check it out, get started, because that's what's important.
Yeah. The idea is this. I mean, again, I don't want to step on Renatus' toes when it comes down to it. I don't want to take any revenue from them, because, again, the idea that the velocity banking class, although it came from the company that I used to work with, and that I actually contributed to the velocity banking class in Renatus, I don't want to step on their toes. I want you to become their student, and then when you become their student, that will unlock Level Up in Real Life for you. And that's where it's at. No matter what level you decide to pick, you will get value added. On top of that, when you become a Level Up in Real Life member, it's whether you choose level 1, level 2, or level 3, I will be creating Facebook groups for all 3 levels. And on there is going to be a lot of the main communication of masterminding and everything like that. Me and Ray is going to be heading those to make sure that everybody gets these questions that they may have answered or pointed in the right direction as they go, whatever the situation is. You take a training and Level Up in Real Life, and you have questions on it or feedback on it, or maybe you found something new or something that's wrong with it, let us know. Because, again, this is just something that I'm pouring my mind into, and I'm still a student. That's the cool thing about this, is that everybody's giving me the same student. But again, I want you to be the expert. I want you to become the expert. I want you to become the person who takes this strategy and molds their end game to it. And, you get to choose your own adventure for, every single time you log in and start learning. Whatever your situation is, it should be covered. If there isn't a situation that's not covered in this that you're dealing with, that's gonna be the fun one. I will work with you personally. Actually, if you find a situation that you're in that you that's not stated in the the expertise and the experiences that I've had and level up in real life. I want to work with you to mold a solution so that way you become that expert as well on that specific situation and be able to share it with everybody else in level up in real life. So again, the goal is to have you become the expert, and once you become that expert, you can do whatever you want from there. So I hope that was of value to you guys to show you some of the student loan strategies that we have. Of course, paying it down was so simple, but there's other things that go along with that. Whether it be, oh, I got to pay my own, or I got to take care of my kids one. There's so many different options out there when it comes to choosing the right student loan and understanding what subsidized and subsidized looks like, and figuring out how you can actually get more free money somewhere else through FAFSA. These are the really awesome real life details that a lot of people should be looking at when their child is age 5. Honestly, to get an idea of where things are going to be when it's time for them to pull the trigger on which college they want to go to, give you an idea of which colleges will actually give you free rides depending on your certain situation, and then all these other strategies. Oh man, there's a level 3 strategy I'm going to have to pop in there about student loans, and I don't know. It's kind of be bordering on ethical, but it is a strategy, and it is something that I've talked to a professional financial advisor about, and they said that is possible, and yes, you can do that. But I'll talk about it in level 3. Some really, really, awesome money saving tips on there. Anywho, sorry, I'm thinking to myself and I'm laughing to myself and watching my friends, my financial advisor's face when I told him the strategy, and then his jaw dropped. He's all like, "That can work. Holy moly, that can work."
That was a loophole that they weren't supposed to know
Yes.
about.
Using velocity banking. Ugh. Fun. Anyway. Ooh, that's going to be something I'm going to have to create here pretty soon, man. It's level 3. So level 1 is meant for those who need to go through a credit, I guess you could say credit restore or credit build. Restoring means maybe you've had some past issues, bankruptcies, foreclosures, collections, all that fun stuff, and you need to restore that. Level 1 is for that. And you don't need to join any education or anything like that for that. You just need to follow the steps on there, and it's pretty cool. It's pretty comprehensive, very easy to follow. You just got to put in the work. And the reason why I put that in there is because I know these steps actually helped so many people that I worked with, from all these years. So take level 1, and if you can prove to yourself that you can do that and you qualify for level 2, then jump into level 2 and get the education package that level 2 requires of you to start level 2 on in that situation, and then go from there. And then once you decide, I want to level to level 3, I'm going to tell you right now, level 3 is a very exclusive club, very, very exclusive. I don't expect many people joining that part. Because level 3 is all about wealth building, real estate investing, business ownership, and end game solutions. So just be honest with yourself. Where do you stand? And if you just want to jump into level 3, but you are actually at level 2, then maybe we should start there first. There's nothing wrong with that. Let's say you go to level 3 and then you start pounding away on what we got over there. Well, I'm going to also give you a ton of perks that come with that. And that includes a lot of the relationships that I have. I'll be able to introduce you to and point you to the right directions as it goes. But also you'll be getting, well, you'll be invited to a yearly summit in Hawaii. Now, I know that COVID-19 is a little finicky right now, but I'm looking at next year being our very first summit. Again, I don't expect a lot of people to be a part of that. But when you come to the summit, you're going to be able to take on 2 days worth of networking and training with us here. I'm going to have a few guests over there to talk about level 3 strategies and mastermind with the small group that we have. And then the next 2 days are just going to be fun in the sun. And if you treat it right and you do the education correctly, then you realize that this is actually a very tax deductible situation. But again, it's tentative due to COVID and trying to figure out what's going to be going on here in the next year. And I'm also trying to figure out if it's going to be during the summer or winter. And I'm pretty sure that those who are coming from the winter months, in the mountains and it's snow, you would love to be able to take a business trip out to Hawaii and enjoy a weekend with us Thursday, Friday, Saturday, Sunday. If you want. So we'll see how that goes. But again, we're going to be modifying it towards COVID. But when it does happen, it's going to be blasted out. And again, you'll be having access to those Facebook groups specifically for those levels so that we can just chime in, ask questions, create feedback, create critique, whatever it is. We're all, learning and growing here. And I can't wait. Till we go fully live with this. But you guys get first crack at it. Check it out. Levelupinreallife.com. Ray, put it in the chat box and tell me what you think. Thanks, Ray.
Dude, awesome, Richie. Man, I am so excited, guys, about going. Well, actually, my wife is super excited. I mean, I've gotten to hang out with Richie in Hawaii, but my wife, she didn't get to go because that was a business trip that I was on. And so my wife's super excited for this summit because she knows that she's going to be able to go now. She's like, oh my gosh, I'm so excited, get to go to Hawaii, and it's going to be 100% business deduction. And man, that's the key. So awesome. Anniversary proposal. If you're thinking about proposing, great place to do it. Or actually our honeymoon. Take your wife on her honeymoon and just visit business right now.
You could renew your vows on Saturday and come to the training on Thursday and Friday. Whatever. So, we're all cool here. We all chill here. When we talk about Hawaii time, it's usually, okay, we're going to start at 5:00. We don't start until like 5:30, 6 o'clock. So we're all laid back over here, but we know what we're doing. So just wanted to share that with you. So thank you guys so much for having me on again, Ray. I love Wise Guys and Ties, and I just really want this to be the greatest relationship and the greatest collaboration that I could ever be a part of. And I'm just going to pour my heart and soul into this as I go, because there's still more that I got to record. I'm not done yet. I don't think I'm ever going to stop because there's just so much in my head. And yes, I got a good library out right now that's in there right now, but there's still more going on. If you look at my whiteboard over here, this is kind of like the list that I got going. So these are all the level 2 things that I've already gotten recorded and ready to go. Now I got to work on all the level 3 things over here, and the list is still going. So I still got a lot of work to do, but don't hesitate. It's going to be so fun. Anyway, thank you, Ray.
Well, thank you, Richie, for another amazing day. Folks, thank you for tuning in tonight. Make sure that you head over there, check it out, and let us know what's happening. Like, as far as give us some feedback, what you're thinking, how you like the videos, the trainings, all that good stuff. And then make sure you get plugged into those Facebook groups where we can really start to build relationships. Take the time now to do the relationships, through the digital presence, get to know each other, network. That way, once restrictions and all that other stuff starts easing up, then you can start getting back, traveling, meeting people in real life and making it happen. So look forward to seeing each and every one of you, working with you guys. Have a happy Thanksgiving. Be safe. Go out there, spend time with your family, and we'll see you guys next Tuesday for another week of getting out of the rat race and leveling up in real life.
Happy Thanksgiving, everyone. Thank you.
All right, everybody. Good night, and God bless. All right. That was good, man. Good stuff.
Man, I've been holding that cough in all this time. All right, man. Thank you so much. I'll talk to you later on today.